All right, so my name is Nick from Income Digs, and you are here live with me at this workshop, How to Superpower Your Building Business with QuickBooks Online. So we're going to learn how we can turn QuickBooks Online into a powerful tool to grow and scale our building business. So what we're going to talk about today is how we can make a shift in our business, and we're going to stop struggling to manage our business financials, potentially feeling lost as to what to do next or where to start. We're going to transform QuickBooks into a powerful tool to help grow and scale our business. So I want us to get a little bit away from QuickBooks is just that box I have to check to prep for taxes. It certainly does that, and that's one thing that we can gather from this excellent software. But it can also help us or help our clients, if we're bookkeepers, to understand their information, understand their financial data, so that they can make really strong decisions about where to go next within their business. That's ultimately what we're after with this really, really powerful software. All right, stay with me to the end of this webinar if you can. We got about an hour, okay? And I'm just looking at my watch here. We got an hour, maybe a little bit extra if we have extra questions, but we have a cool special bonus. We just launched a really amazing product. And for those of you who are on live, we're going to reward you with a really cool bonus for that, okay? And we are recording this session, but if you don't mind turning off distractions and taking notes if you want to, we are going to record this whole thing. So all the questions that come through, I'm going to answer those. If I don't get to any, you're going to get that recording tomorrow, okay? On the topic of questions, the chat is working nicely over here. You'll see my head swivel over there. I'm looking at those questions, okay, and at the chat. If you have questions about anything that I'm going over, throw them in there right when you have that question. We're going to go through the three topics kind of in stages like that. And so I'm going to, before I move on to the next, I'm going to look over to the questions, see if we can answer them. If I don't get to all of them in that time, we'll have a Q&A at the end where I'll catch up, okay? So throw your questions on the chat as you have them. No question is a bad question. I will answer everything that I can right here with you live, okay? All right, so why are you here? You showed up to this session. It's 5 o'clock Eastern, and I know it's probably not the best time for a webinar, but we had to issue a ton of different slots, and you're here, and that's wonderful. You're going to spend an hour with me, and I'm really happy that you're here. So what we do when we schedule these webinars, I send out a survey to maybe 10, 15 people that sign up, and I really ask the question, why did you sign up? What type of business do you have? What struggles are you having with QuickBooks, with your business and accounting in general? And here are the top 3 answers that I get. The first is that we had people sign up because they're fed up with managing inaccurate or disorganized financials, right? So we have financials somewhere, we're not really sure where, and we don't know if they're accurate. Maybe we're looking at a spreadsheet, or maybe we have QuickBooks set up, but we can't trust the information. We can't trust the data. We log in, it's like, ugh, what is this? You know, if it doesn't look right to me, I'm fed up with it. Okay, so that was number 1. Not necessarily the most popular, but one of the main reasons that people signed up. The second is that we had some folks that wanted real-time financial data. Okay, so they wanted to know at any given point in time, what's my profit? What's my gross profit? What's my margin? We're going to talk about margin quite a bit today. Okay, and can I get that information in real time? As opposed to waiting until way after the project is done, maybe waiting until the fiscal year is done, or even worse, but very, very commonly, waiting till the fiscal year is done and waiting until our accountant does our taxes, right? If we're doing that, we're 15, 16, 17 months after actuals have taken place, and we're way behind on making decisions for our business. So we want to be able to make real-time financial decisions. The third one that came up was folks lacked clarity on the correct way to organize their books. So it was really about, I kind of understand QuickBooks. I know what's going on generally with accounting, but this building business, this flipping business, this renovation business is a little bit different, and I'm not exactly sure how to organize my books. So we lack some of that clarity. So I'm going to ask if we can use the chat one more time. And if you don't mind throwing in there, if any of these 3 resonate the most with you, or something else, if you could just put that in there, if 1, 2, or 3 makes sense to you, just throw that in there, because I'm going to get an idea of, from those of you who are here, which ones of these matter the most, and I'll kind of gear my conversation that way. So Jennifer's saying number 3. 1, 2, and 3 for Lori. Awesome. That makes sense. 1 and 2 for Sharon. All right. We get a lot. Honestly, I'll say, so we did 2 other sessions last week, and it was weird. The first session was all number 3, and then the second session was all number 2, and this looks like it's a little bit mixed there. So whatever the motivation is, why you are here, okay, I get it, right? Because as those of you who know me a little bit, we're going to go into this a little bit about my background. I've been in your shoes, and I currently am in your shoes. So I own a flipping business, a real estate business, a building business, custom home building, And I do bookkeeping, or I did do bookkeeping for others. Okay. So everything that I talk about, it's coming from, I've kind of been through those pains and I'm solving those problems for my business. Right. So how did we get here, and how did we come together here? A little bit about my background, so you know who I am. Okay. I started consulting at IBM when I left college. I graduated college, and I was a process and systems consultant. Learned a lot, worked with some amazing people, and we were learning we were working with companies and helping them understand what their problems were and how they can implement software and systems processes to improve their whole experience, okay, improve their businesses. Eventually, I got into flipping houses with NY Home Solutions. I started that business to flip houses, to get into some rental properties, did a lot of that BRRRR strategy, the value-added investing. And that kind of then shifted into Oakvale Homes and Development, where I do high-end residential remodeling. We do custom home builds. And those two businesses I still own and operate today. As I started those businesses and started to grow them, I found a need to kind of solve some of these little problems for my own business. How do I use accounting software? How do I use property management software? How do I get a CRM working? And as I solved those problems for these businesses, I started sharing that information through a vehicle that I called Income Digs. And I started showing YouTube videos and, started making some courses and consulting and doing some one-on-one coaching and all of that stuff. So I can share all the stuff that I've learned, implemented, and built for my businesses. I can share that with other folks out there, because I'm realizing as I was doing these businesses, these are really interesting niches, really interesting industries, and nothing out of the box really works for us. We need to tweak it a little bit. And so I was able to do that, and I'm sharing that with you. And you undoubtedly have found me through Income Digs. That's how you have gotten here. Okay. And I'm so glad you're here, because this is exactly what Income Digs exists to do, is for me to share what I've learned. And that's exactly what we're going to do today. I absolutely love engaging with my audience. If this is your very first time meeting with me like this, great to meet you and welcome. If it's not your first time, you probably know, if you're in my courses or somewhere else, I'm engaged with my audience constantly. So if you're in a course, I'm always scouring through the community. I'm answering questions that come up on there. People will email me. It might take a little bit, but I'm always going to get back to them. So I absolutely love and I thrive on engaging with folks like you. So thank you so much for showing up live. This is exactly why I'm doing Income Digs, so that I can share information with you, get your questions, answer them, and then we can all build our businesses, help out our clients, and move forward in this really, really difficult industry. Okay, so I've spent hours testing and retesting my strategies. Okay, like I said, I built them for my own businesses, and then I implement them for others. Okay, and I'm kind of the guy that when I got my sights set on something, I'm not going to stop until I figure it out. So I was beating my head against the wall when it came tax time for my businesses, and I had to find a better way. So I literally spent hours figuring it out, figuring out the two-dimensional chart of accounts, products and services, margin versus markup, all that stuff. I built the system that works for my business, and I'm going to share that with you today. I use QuickBooks Online every single day within my own businesses. So I literally do exactly what I teach for the real estate company, for the building company, and even for Income Digs. I use QuickBooks Online as well. So I'm in the software constantly every single day doing exactly what I teach. And I get to work one-on-one with bookkeepers and business owners just like you on a consistent basis. And that has been really, really helpful to me, because I'm getting to learn the nuances and the various differences between all of our businesses. This industry is a little bit interesting in that way, right? A real estate investor doing what I do is going to be different than somebody who's doing a lot of short-term rentals, or maybe it's trailer parks. Maybe they're building custom homes T&M, where I'm doing custom homes fixed price, right? So we're all a little bit different. And so working one-on-one with folks like you has really helped me to ensure that I have a really wide breadth that I can share with everybody, okay? So little secret here, QuickBooks was not made with a building business owner in mind, okay? Nor a real estate investor. QuickBooks is an excellent product. It's the best product out there for bookkeeping and accounting, but we're a little bit different, okay? And so if we understand that, we can hopefully get past we open up QuickBooks and it's not quite right for us and we shut it down, or we just kind of skirt through it and, try to add some accounts and get to the end and give it to our accountant, right? If we're aware of QuickBooks not being built specifically for us, yet it is really good software, I think that helps us get over that hurdle. And we know that we just got to make some tweaks, some slight adjustments. We got to build that foundation correctly to make it work for our business, which is certainly unique. So what would it feel like if, one, our financials were neatly organized? We knew where everything was. We knew it was accurate. we could quickly understand how much we spent on each project, right? So we talk about that real-time information. We don't want to wait until the project is done, the year is over, or we get our taxes. Our reports are easy to run and accessible in real time. You're going to hear me say reports, reports, reports a lot. If we can't get the reports we want, then what's the point? Okay. And a report is not, it doesn't have to be this fancy year-end thing. A report should be weekly, monthly, quarterly. How am I doing? How's that one project doing? What's my gross profit? How am I performing on this project? I need to know in real time so that I can make adjustments if and as necessary. Building and maintaining a structured accounting architecture, it means we're no longer guessing about the financial health of our business. We begin to see financial data in real time, and we can make proactive decisions to grow and scale our business. And that's the key right there, proactive decisions. We don't want to wait too long. We need to see the information as soon as possible so that we can make those decisions for our business. So let's get into it. Thank you for bearing with me on that intro. How to superpower your business with QuickBooks Online. We're going to talk through 3 essential foundational strategies, okay? And we're going to start with the importance of understanding the difference between markup and margin, okay? Whether you build houses, whether you renovate houses, whether you flip houses, I want you to understand the difference between markup and margin. Okay, so what is our markup? Markup, I think, is intuitively a little bit easier to understand. It's not our margin, it's the percent we add to the cost. We go to the store, we buy something, we pay a subcontractor, we pay a vendor, and then we add to that cost a percentage that then gets billed to our customer or gets added to whatever price we're looking to get for the house we just flipped. So we consider that cost when we're estimating fixed price projects, or we're tracking billables for a cost plus project. So whatever that percentage is, we're adding it to our cost. That becomes the price to the customer, the price of the house. Okay, now QuickBooks Online enables us to mark up our billable items. Okay, we can click a box that says this is billable and I want to add 15%, 20%, 30%, whatever. Okay, but it does not show up on reports. What is margin? Okay, it is not markup. And I put that first on both of those because often, as you're going to see in the next few slides, we're confusing the two. So margin is the gross profit as a percentage of revenue, whereas your markup is related to your cost. Your margin is directly related to your revenue. Basically, if we understand what our margin is, it's kind of like, here's what our profit is from doing the thing we do as a business, whether it's flipping houses, renovating houses, building houses, renting properties, and it's what you have left. Okay, so our gross profit, then we take from that the cost of running the business itself. It's the rent for my office, it's the utilities, maybe it's the trucks, maybe it is insurance. Okay, so all of that stuff comes out after the profit. Our gross profit is a key performance indicator. We should be tracking this at all time, not at the end of projects. And we can auto-calculate this in QuickBooks Online, but we need to be using cost of goods sold effectively. Okay, so let's do an example of how these two relate to each other. So very simply, we have a project that costs $100,000. Now this could be a flip, this could be a renovation, whatever. Okay, we add a markup of 30%. Why 30%? That's just a random number for now. We're going to talk about how to figure out what that markup should be down the line here. So if we add 30% to 100,000, really easy math, our total price is 130,000. Okay, so that our markup is 30%. What's our margin? Okay, so what happens very frequently and unfortunately is students of mine will say, well, our margin's 30%. It's right there, right? That is not true. What is our gross profit? Because now we're looking at the $130,000 revenue. It's a percentage of that. So we break it down really simply. Our revenue, $130,000. Our cost of goods sold, the cost on the project, $100,000. Our gross profit is $30,000 divided by $130,000 equals 23.1%. That may be a fine gross profit. I'm not here right now to talk about what is a good and what is a bad gross profit. What I'm here to talk about is how this gross profit percentage is not 30%. It's always lower, okay? Naturally, based on the formula, it's going to be lower. And we need to understand that because, unfortunately, a lot of business owners are creating metrics and creating systems and strategies based off of that gross profit margin, assuming it's going to equal the markup, and it doesn't, okay? So we assume markup is equal to margin, and we're running our business as if that markup is what we have left over. So if I mark up 30%, we're kind of assuming we have 30% left over, and that's absolutely not the case. No, not enough business owners are tracking margin in real time. We're waiting till the end of the year, and then we're trying to see it, And we're like, oh, okay, my margin was 23%. Maybe that's good, maybe that's bad, but we don't want to find out down the line. And it's because we're not taking advantage of cost of goods sold properly, okay? We should always be able to answer this question. If you're a bookkeeper, I want you to talk to your clients about this question. And if you're a bookkeeper too, one thing I'm going to be teaching you throughout this here, it's not just about checking the box for taxes. That is your number one job. You want to do that for sure, but you can wow your clients by giving them financial information that can be, oh, I didn't know I could get that from a QuickBooks report. I'm going to show you exactly how to do that. But this would allow you to charge more for your services, take on more clients, etc. Okay. So if you're a business owner or if you're a bookkeeper for a business owner, okay, we should be able to answer at all times, what is your gross profit margin? Okay. The solution is to properly track cost of goods sold. Let QuickBooks Online auto-calculate our margin for us. All right. So let's see that in QuickBooks. All right. So what I'm going to do is right now, I've got a profit and loss report for the first half of 2023, and we're going to see it kind of the not so awesome way, okay? Actually, before I do that, let me just go to an estimate. So you're probably starting to think about markup at some kind of point when you're doing an estimate, okay? Now, I'm not going to get into the details of this estimate sheet here, but what we have is a bunch of cost lines, okay? And what we do is we take the cost and then we add a markup, okay? And that gives us, here's my total cost. There's my markup, 30% gives me my total price, and that gives me a margin down here, okay? So that's just kind of how we think about it and we do it. So we should be doing it on the estimate side. How do we do it in actuals when we're actually tracking our projects? So with this P&L, I don't have it, okay? I got income, $950,000. Now I got gross profit at $950,000. Is that true? Do I really have zero cost of goods sold? Well, the problem here is that my cost of goods sold or my cost of doing the thing that I sell are buried in my expenses. So we look at my expenses here. Some of these belong, okay? Insurance, internet and phone, legal and professional, that all makes sense. Construction materials doesn't, okay? The construction materials that I put into whatever I sell shouldn't be in expenses. It's getting buried and I'm losing the ability to calculate my gross profit. Same with subcontractors. And lastly, wages, internal wages, okay? So what we need to do, and this is a really simple thing in this example, we need to switch that from expenses to cost of goods sold, and it's going to turn on some lights on our reporting. So I'm going to go to my chart of accounts, okay? And I'm going to find some of those categories that are currently expenses. So for example, wages, internal labor. I'm going to edit that. And I'm going to make this a cost of goods sold, okay? Cost of goods sold, I'm going to do cost of labor. Now, QuickBooks is going to warn me, and they should warn me that, hey, are you sure you want to change this? Because it's going to potentially mess up your reporting. I'm going to say yes to that. I actually want it to change my reporting. All right, so we have that one. Let's do subcontractors as well. So I'm going to do subcontractors as cost of goods sold. So cost of labor again, save, and I'm going to say yes to the warning. All right, and then last we have construction materials. Okay, so that's the last one I'm going to do right here, construction materials. I'm going to edit that. Go cost of goods sold. And supplies and materials, save. Okay, so now if I go back to my report, first half of 2023, you can see what happens here is now I've populated cost of goods sold. And that simple adjustment gives me so much insight. I'm able to actually see a gross profit here. And then with one more click, I can turn on a built-in reporting feature, percent of income. I'm going to click that right there. I'm going to click run report. And right there, I get it right in my face. I get my income, my cost of goods sold. I got my gross profit as an absolute number, and I have it as a percentage. 33%. Excellent. Maybe. I don't know. Right now, I don't know, but I'm seeing it at least. Okay. And this is the value of reporting like this. I'm able to see that percentage, and that's a KPI. It's a key performance indicator that I can establish for my business and start tracking it quarter to quarter, month to month, year to year, project to project. What should my gross profit be? Okay. Now, net profit is certainly important and probably more important in the long run, right? But sometimes it's harder to impact the net profit, meaning I can't really do as much with these expenses sometimes. Certainly, there's work to be done on these expenses, and we can potentially get these down. So we're going to be looking at both, but that's the point, is I want to look at both of these, and I can tweak whichever ones I have the biggest potential to change. If I'm seeing that my gross profit is 33%, and I know that, hey, I want a net income of like 10, I got to get 9% from one of these. And expenses, maybe I can squeeze 1 or 2% out of that, but that's it. And I got to get like 7% out of my gross profit. That means I need to adjust my markup. I need to be charging more for the stuff that I'm paying for. And that's the insight we need to turn on for ourselves in our business or for our clients if we're a bookkeeper. Okay? Absolutely essential. Now, I understand cost of goods sold is going to be a little bit different for everybody. I took simple categories here. If you're flipping houses, the purchase price of the house, the renovation cost of the house, okay, the holding cost of the house. And what's interesting about that is we can go a little bit deeper. Yeah, I got the total cost of goods sold, but maybe I care about those really specific categories too. Maybe last year I was tracking at 25% subcontractors. This year I'm at 30%. Is that a choice I made? Do I want to use more subs, or am I using more subs because I'm taking on too many projects? This is all stuff we can do when we're looking at it this way. Okay, so that's number one. First thing we need to do is be tracking cost of goods sold accurately so we understand the difference between markup and margin. Now, I promise you this, the formula, really easy formula. What's the markup calculation? If I know that I'm supposed to get a gross profit of X%, what should my markup be to get me there? Really easy calculation. Markup equals our margin divided by 1 minus our margin. Okay, so quick example. If I want to make a 30% margin, what must my markup be? My markup is going to equal 0.3 divided by 1 minus 0.3. It's going to equal 42.8%. So you can take that and you can say, okay, great. Well, should I round that up? Maybe I round it up to 43, round it up to 45, give yourself a little buffer. Maybe you have a really good client. You've done a lot of repeat work for them. Maybe we bring it down to 40%, give them a little break. Whatever the case, that's the formula you use. All right. Questions on that, throw them in the chat, but I'm a little bit behind, so I'm going to go on to number 2. But questions, I will answer them, I promise. So number 2, bulletproof cost codes. Okay. So what are cost codes? Cost codes are categories that we use when we're estimating projects, but too many of us are not actually tracking our cost codes when it comes to actuals of our jobs. Okay. So we want to leverage products and services to augment our reporting. Now, the word product and service is one of the pet peeves I have with QuickBooks. They're cost codes. Okay. If we're in the building industry, we know that we have cost codes. QuickBooks calls them products and services, right? We just need to be aware that those are the same thing. So we need to use, in QuickBooks terms, products and services to turn on our cost codes. It adds an additional dimension to our QuickBooks Online reporting. We're able to get not only the information from the cost, from the chart of accounts, which we were just looking at, but we can dive even deeper to see it by cost code. It's also the optimal link between external software and external reporting. So if we're shooting our information out to Buildertrend or to CoConstruct or to an external Excel, something like that, we're going to want to use products and services. This historical information tracking these actuals enables us or our clients to make more accurate decisions when estimating projects. So categories aren't enough. Oops, sorry, I'm going backwards. Categories aren't enough. So categories are a chart of accounts. The problem with categories, so if we were to say, okay, rough electric, rough plumbing, demolition, drywall, paint, these are all my categories. These are my cost codes, right? A common mistake is that we add those to our chart of accounts and we start showing a gigantic profit and loss that lists all of those cost categories. All right. The problem is that it makes our profit and loss unreadable and difficult to interpret. And we also don't want to continuously be changing those as we add or subtract categories. Now, what I've done for kind of the first time is I took a long time to build out an example where I do it the wrong way. I'm going to show you that in a second. So here's how it works. We're going to turn on our items table in our settings. We're going to add our list of products and services. We're going to add our cost codes. We're going to map those products and services to a specific account, chart of accounts, and then we're going to start using them instead of categories. Okay, so let's see this in QuickBooks. All right, so to demonstrate this, I'm going to go to a separate set of books. And as I mentioned, I did it the wrong way to show you how bad it can get. And so when I say the wrong way, that's what is a cost code, by the way? Let's just look at a few of them, right? So if I look on my estimating, this is an example of cost codes that we could potentially use, right? So rough plumbing, electric, HVAC, whatever. Your list is going to be different than mine. It's going to be different than everybody else's, okay? I have different videos out there on how detailed you should be, but let's just say for now, you have a list of cost codes, okay? You have some kind of list. And so one thing that we see often is that we'll take that list of cost codes and we'll start adding them to the chart of accounts, right? Look at this, building permits, demo, all that stuff, right? It's a really simple thing to do. Why don't I just categorize like that? Okay, now the problem with that, if we go to our reporting, is this is my P&L for this project. Look at this gigantic list of cost codes, okay? Now, I added, for this demonstration, I added like 20. I personally, in my business, have 80. Okay, now you might not need to have 80, but regardless, you're going to have too many to populate on a profit and loss. You want your profit and loss to be easily digestible, and in this case, it's not. It's too many pages. I'm going to be scrolling, and I'm not going to be able to understand what I need to at this high level. Okay, your profit and loss should be 1 page, maybe 2 pages. Okay, that should be the max. We can always get the detail later if we use products and services. So how did I get here? Well, what we're doing is when we create an expense or we accept an expense from our banking feed, we're going right here and we're going like, all right, rough electric. And that's my category. See, I'm using category here and I'm spending $4,500, $45,000 in this case. Maybe I'm indicating my class. We're going to get to that in my next, the next thing I'm going to teach. And that's it. Okay. And that kind of works, but it leads us to this. So what we need to do is we need to turn on products and services. I'm going to do that right now. I'm going to go to account and settings. I'm going to go to expenses. And right here, bills and expenses, I'm going to show items table on purchase forms. I'm going to turn that on. That's the first thing I have to do. Save that. Okay, I've just done that. Okay, now when I go to create an expense, you're going to notice something different here. I see this items table and I have a product and service here. I'm no longer, at least for my construction expenses, anything that's related to this project, cost of goods sold, I'm going to use product and service instead. Now, where does this come from? Where does this list come from? Okay, we're going to add that list right here. I'm going to go settings, products and services. Now, this takes some time to get in here. I have videos on that in YouTube on how to get this list in there. We're going to add a service for every cost code we have. We're going to add a service. Okay, we're going to say drywall. Okay, maybe you have numbers, maybe not. You can do a category. And here's the key. I purchased this product or service. You don't need to populate a cost because you're going to change it every single time. And then this right here is mapping it to either our P&L or to our balance sheet. Typically, most of the time, we're going to be doing it to our P&L, to a cost of goods sold account, something like construction materials. If you're flipping a house, maybe you have an account that's like rehab costs, okay? Or maybe it's split up like this, whatever, okay? And you'd save and close that. And so now, whenever I indicate and use my product or service, that mapping is going to take care of itself, okay? So if I go create a new expense, okay, now instead of populating categories, I'm going to leave that blank. Instead, I'm going to go right here, rough electric. Okay, and I'm going to say, now I had a default cost, and then I'm going to say 4,500. Again, we can do that. We'll do that in the next lesson there. Okay, save and close. Now, when I do that, what I get, if we go to my reports, notice I'm always going to reports. How did that impact my report? I go to the profit and loss. Now I see my income, and look at how nice and neat this is. I have construction materials, I have subcontractors, and I have a total. Now, of course, your P&L is going to be bigger than this. You're going to have general business expenses and other things. It's not going to be this concise, but this part is nice and concise. If I want to see the details, okay, I'm going to drill down, and now I can take this and group by product or service. And there I see how much I'm spending on building permits, demolition, all that stuff, right? I see all that detail. So I'm getting the best of both worlds. I'm getting the high level view on my P&L, and then I'm drilling down for those details. And as I mentioned, this is perfect for external reporting. I can pull all this information out and I can see a really cool graph. I can bring this into Builder Trend. Okay, so that's kind of what I'm doing here. Here's my cost codes in Builder Trend, and I'm bringing in QuickBooks costs right here. Okay, that's the ultimate link. Now, even if you or your client are not using these external pieces of software yet, probably you will be down the line. If and when you continue to grow, right, we're going to probably connect with some kind of external software or some kind of dashboarding that we need to go beyond QuickBooks. And if so, we need to have those cost codes, those products and services in place. I got a question coming, so I'm just going to read this for a second. Okay, so I watch set up products and services projects. How do you see the detail in the reports for all the product and services? Okay, so I think that's what I just showed, Halinka, and correct me if I'm wrong. So what you're going to do is you're going to take your filtered report. Now, to what level did we filter my report? Right now, I'm saying I think this one is customized to be just one project, okay, which we're going to talk about in my next thing here. You're going to take your filtered report. This is filtered by dates, and it's probably filtered by project, and I'm going to drill down into this, and now I'm going to do group by product or service. Okay, now I can take this report and I can save it. Okay, and I can say like, all COGS by cost code. Now, cost code, product, service, same thing, right? So use whichever word makes sense to you, but that's how we're going to do it. All right. Now, Halinka, I'm going to go in the next, what I'm going to be teaching is about projects. So I'm going to go into that and we'll continue with this example. Okay. All right. So let me shoot back over here. I'm going to keep going, ask questions, ask follow-ups. Yep. Sounds good, Halinka. Feel free to ask more questions. If you check things out, I'll be here. So let's just keep going for now, though. Okay, so if you want to leverage the true power of QuickBooks Online, do you have to be a CPA or a QuickBooks expert? Hopefully you're realizing that you don't. It's just a matter of tweaking things, right? We just have to understand that we got to cut through the weeds a little bit. QuickBooks is a great tool. It wasn't built for us specifically, so we need to make some adjustments and set it up specifically for our business. You don't need to be some kind of crazy expert. In fact, CPAs often cringe a little bit at this stuff because they're dealing with businesses from all over the place, right? So they're not really used to all our nuances. So they might see our cost of goods sold strategy and like, oh, why are you doing that? It gives us as business owners, as bookkeepers, what we need to run our business. They'll get the tax information out of it. I guarantee you their job's way easier than ours. We need to understand how our business is running. All right, with that, let's talk about the projects portal, okay? So a really important question. We get this all the time. How do we differentiate the different projects, properties that we work on in QuickBooks Online? So historically, QuickBooks has been really bad at this, but it's recently come a long way. So option one is we can use customers and projects, as Halinka is kind of asking about. We can use that little portal, the projects portal. That's option one. And without doing anything else, that's a really good option, probably the best option. Option two, we can use class. There's some benefits of each of these. We're going to talk about them, okay? Option three, if we can get away with it, meaning we don't need to use class for something else, we don't need to use project for something else, we can use both. All right, so I'm going to show you that. I'm going to show you the benefits of using both customers and classes to track by project. So why do we use projects as our starting point? Well, or how do we do that? First, we had a customer. So this is the actual human being, or in the case of a flipper, okay, maybe it's the just like the parent property, or it's the type of property. It kind of just needs to be something. Okay, if you're not actually billing a customer, it can be whatever helps you organize your books the best. But the important thing is that projects are sub-customers of customers. Okay, so when we call it a project, architecturally, from QuickBooks standpoint, it's really a sub-customer. It's a little bit weird, but it's kind of, you'll see how it all relates to itself. We're going to track income and expenses by project. Really easy to do. There's a little field for us to do that, and then we can report by. And then if we can, we're going to add class to clean it up. So why we should be using projects. One, it's got a really quick at-a-glance reporting feature. It focuses on profit margin, what we were talking about in the very first part of this workshop. Profit margin is super essential. We need to understand our gross profit. Can we see it by project? The projects portal allows us to do that. It's also a key link with external software. And that's why I put it as number one. I'd rather use project or customer over class for this main reason. If we are connecting with Buildertrend, CoConstruct, Jobber, anything like that, we are going to need to indicate how the projects link, and the way that they're all doing it through architecture is through customer or project. Right? That link is essential. So Buildertrend really needs two things to connect: cost code, product or service, and project. Okay. Now that's Buildertrend. Again, I understand not everybody's got Buildertrend. No big deal. If you're thinking about it, your customer's thinking about it, you're going to want to ensure you're using those two. So let's see this in QuickBooks. Okay. So we're talking about projects. So how would I potentially add a project, or what does a projects portal look like? Well, what I have here, I have 3 projects that are up, and you can see these projects, look really good. I got income, I got costs, I got a profit margin right there in my face. Okay, that looks great. So how do I add a project? Well, I can go here and add a project, but the first thing it's going to ask me, or the second thing it's going to ask me is, who's the customer. So I have to make sure my customer exists first. Okay, now again, if you're renovating, if you're working for a third party, this is really self-explanatory. It's really intuitive. It's just a human being. Okay, it's whoever, it's a human being. Now, if you're flipping a property, then you're probably going to want to do something like, 123 Main. All right, or you can use a category. You can say like fix and flips. All right, so I'm going to do that. Let me do fix and flips. Okay, it's not an actual customer that I'm going to invoice, but it's just, this is my category of fix and flips. All right, now it brings me to project. I can add a project right here, or I can go to the projects portal. I'm going to do it right here. Okay, so we're going to call this 123 Main Street. It's under fix and flips. I can indicate a start date and an end date. Honestly, you're probably going to be managing that a little bit more outside of QuickBooks. QuickBooks is not a project management tool, so the actual dates are probably going to exist elsewhere. Project status, sure, you can put this in here. It's going to help you with filters, etc. All right, so now that I've set that up, it brings me to my project portal, and I can quickly add to the project an expense. I can do it right here, or from my bank feed, or right here, I can add an expense. And again, we're going to use product or service, so I'm going to go rough electric. And right there, I can do 123 Main Street, populate that, save and close. And we're going to see it populate right there. Okay, looks good and kind of easy. And I love this portal. Okay, if you're flipping a property, and you don't really sell it until the end, right? But what you can do, and what I've been teaching, is we populate the cost. That's easy. Purchase price, and actually I got one in here. Purchase price, holding costs, buying costs. Put in your ARV as a phantom journal entry so that you can track through over time what it will be as far as profit is concerned. You'll be able to see what will my profit margin be. Okay, it's really, really valuable. So this is kind of self-explanatory, and I can see my projects together. I can see the different profit margins. But what I can't do really well is if I go to a profit and loss, let's say as of 2022, and I want to display my columns by. What if I want to see multiple projects aligned next to each other? I want to see the revenue. I want to see the cost of goods sold next to each other. I can display columns by, and now I don't have a item for projects. The reason I don't see projects here is because it's customers, right? Projects a sub-customer. So if I can click customers, I can run that report, and I see my projects, but unfortunately, I see a bunch of other stuff that I don't want nor need. I see the parent customer. There's the project that I actually want, and I see a total. Now, the total equals the project that I actually want because this parent is blank. I'm not putting anything there, okay? But you can see that I'm getting no less than 3 columns per project. Right now, I have like 3 or 4 in here. What happens when I have 10, 15 properties going? I'm going to have 45 columns. And again, it goes back to reporting. If it's unreadable, it's unusable, okay? So can we instead take some of these expenses, okay, and use class in addition to the customer? Okay, so I'm using customer and I'm using class. If I do that, again, added work, understood. We might be using class for something else, but if we can do that, now I can display columns by classes, and I get a nice, neat, one-to-one. Every project, every property has a class, okay? And so if we have the ability to do so, and we can build in those processes with a VA, with a bookkeeper, with ourselves, whatever the case is, so that we can have class and project, we're getting the best of both worlds. We're seeing a nice, neat report here juxtaposed together, and I'm getting the benefits of the project report and the connection to external software.